All right, welcome back to another episode of the Cape Coral Waterfront Podcast. Today in the studio, I have a special guest, Patrick DeRosa, who is the branch manager and a senior loan officer with the Infinity Group International Corp. Patrick, thanks for taking the time.
Thanks for having me.
Hey, so Patrick is the money guy. He's a mortgage broker. In every deal, money is something that is important. So how long have you been in the mortgage business?
35 years.
Wow.
In mortgages, real estate, and finance.
So you're just getting going.
I'm learning every day.
Excellent. And so you're a broker.
I am.
Okay, so let's talk about the difference between a broker and just walking into a bank and dealing with just a regular, somebody at a bank.
Okay. Essentially, as a broker, I am signed up with right now 15 to 17 different lenders. And what that does, it allows me to place the consumer with the best possible product that's available for them. Okay. Every lender has a different appetite for different products, whether it be government paper or conventional or even a non-QM. Going into a bank or even a mortgage company, a direct lender, they're only allowed to sell the products that are offered by the company that they represent.
Right.
So their rates are all dictated based on company margins and those kind of things.
So it is what it is, and they have what they have, and they can offer you what they can offer you. And other than that, you have a lot more options to get things done
right now. And with rates where they're at and as low as they are, on the wholesale side, because that's what a broker is. I'm a wholesaler essentially.
Okay.
We get to see there's different appetites.
Right.
So right now we have a couple of lenders that only want government paper. They just want FHA and VA.
Okay.
And they offer incentives to get there. So we could be very easily at, we've seen a 2.25 on FHA and VA recently with, huge lender credits.
Yeah, 2.25 is like free.
It's free. Because that's the product that they want.
Right.
Then we have other lenders that want conventional, but they want the conventional paper, but they only want it based on tiers. So someone who currently right now has a 740 credit score, on a 15-year would be a 2.375 or 2.25 with potentially a lender credit because that's their appetite.
Right.
So we place that consumer to the appetite for the lender who wants the paper.
Right.
It also goes into every lender has a little twists and turns in their process. What they would require for self-employed, especially with COVID right now, there are a lot of overlays with COVID, and some lenders put some crazy overlays on there for self-employed borrowers. They want a P&L, they want 3 months bank statements, they want CPA letters, they could want all kinds of different things. Again, if you only work for one company, that gets dictated down, and you as a loan officer and your processor have to follow through it. I have options. Some have better overlays than others.
Right.
So from an ease of use, it doesn't sound like a lot, but that might be the difference between closing in 24 days versus 32 days.
Right.
To try to get that extra documentation.
Right. And in some cases, it means getting the deal or not getting the deal at all. Deal.
That's true.
Right. And Patrick, his office is in my office here at the RE/MAX office, and it's, it's great to know because I know that there are times where you say, the best person for this guy is not us.
Correct.
So that's the other thing I really liked about the way that you work is you're not just looking to get what's best for you, it's what's best for the client.
Yeah, at the end of the day, no one wants to lose business, right?
Right.
Everybody's here to make money, and that's what we're supposed to do. But, I have there's a symbiotic relationship between me and the realtor.
Right.
Ultimately, you are my customer.
Right.
So I have to do what's right by your customer in order to make, put you in the right light to make sure the deal gets done. At the end of the day, if I can't do the deal for whatever reason, I'll find you who to take it to. And I'll hand it off. I'll send it over. We'll transfer appraisals. We've done a lot of different things. We don't like to do it, but we have to do it in order to maintain what we're trying to accomplish, right?
Right.
We're looking for that true partnership, and that's what we work towards.
Right. Okay, and now money is portable.
Yes.
And, people that live in New Jersey or Michigan or Ohio, they might have a mortgage guy that they've worked with up north.
Yes.
What's the benefit to using a local Florida licensed broker versus like using their guy from back home?
Listen, I work a lot in Cape Coral, obviously. We're located in Cape Coral, and I do Fort Myers, but specifically just like Cape Coral, right? The land of the ice lagoons, but they're waterways. They're waterways all over the place.
Right.
If you came from up north, you wouldn't be aware of that.
Right.
You're not aware that if your house is on one side of the block that has on a Gulf access lot that's could be worth $650, and the house right across the street, same house, same square footage,
right,
might only be worth $375,
right,
because they don't understand that that's our marketplace. It's really understanding what we require and how we do things and knowing the market that sometimes other lenders that aren't from the area don't get. Right. And then when you add flood insurance and elevation certs and that kind of stuff, it just adds to the delay because they're just unaware of the marketplace. I wouldn't expect a loan officer in Florida to be able to do a co-op in New York City.
Right.
Because it's just outside their norm. It's outside their expertise.
Right.
And then you have to add the service levels. The fact that we're here, we're approachable, we answer our phones. Right. We get to meet with them here, as opposed to just an email and phone. How much is that worth?
Yeah, it's worth a lot to me because I know, my wife yesterday, who's also a realtor, we were talking about like land deals.
That's right. I
just walk around the corner down to the office, ask you a question about land financing right off the top of your head.
Here's where you take
this guy.
That's right.
So there's a lot that goes into that. And like you said, in the closing process, putting the package together, knowing what's going to be necessary without finding out
at the
4 days before closing that, you need flood insurance and all this other stuff it's a big benefit.
That's true.
For for people buying or just like doing local business. All right. We talked about this yesterday. Let's talk about nobody likes surprises. Let's talk about the difference between closing costs and cash to close.
Love that. Anytime someone signs a contract and they get ready for a mortgage or whatever, they're going to get their loan disclosures in the mail, right? And that's all the federal disclosures and all the regulations, what their rights are, and so on, and the loan estimate. And the loan estimate is the breakdown of the total costs. And people have to understand that there's really a difference between what is a closing cost and a cash to close. I like to break them down. The true closing costs, the cost of the appraisal, the title charges, transfer taxes, those kind of things are costs. What throws them off is when they see their cash to close and they don't realize that prepaids, your taxes, are being escrowed. Your hazard insurance has to be paid for the first year. That's being escrowed. And depending on the time of year, since our taxes are due in November, will determine how much money those prepaids are going to be set. So you could have closing costs between $5,000 and $6,000, and that's probably right. And then they get their cash to close, and it's $11,000,
right? And
their heads pop off.
We just had this happen. Yes, and my wife. I was just talking to you about this yesterday outside, and then I got home, and my wife was saying, "Oh my God, we had this. There's like $850,000 deal,
correct?"
And they got the statement with the cash to close. And he said, I thought I was putting 20% down.
That's right.
And now it's like an extra $8,000. It was almost the same example we just talked about.
It's exactly what it is. We try to explain it to them best we can at time of application. We certainly explain it to them when they get the loan estimate and they have any questions and they call us. But, we have to be more upfront with some of these folks and tell them, what does it really cost? I mean, especially with FHA. Right? FHA, remember, is 3.5% down.
Right.
And that's easy to figure out.
Right.
But if they're short what the estimated closing costs are going to be plus their escrows, now we're playing a little bit.
Right.
Now all of a sudden seller concessions come into play. Maybe they leave a little bit more.
Right.
That we should discuss at time of contract as opposed to at the end, because that's going to make or break the deal.
Right. When you're going into the real estate transaction process, there are a lot of emotions at play. And a lot of what we do as agents is keep the emotions at bay because we manage these transactions on a daily basis.
Correct.
And when you go through it, you have to know step by step.
Correct.
What's going to happen. But, you just don't want these surprises at the end. So you're thinking, okay, I'm going to buy this house for $500,000. I need 20% down.
That's 100.
You know, there's $100,000, and then you realize that it's not $100,000; it's more.
Yeah, it's 118.
Right.
And it's like, okay, well, why? Well, here it is.
Right, because you're escrowing for taxes, hazard insurance.
And you have to pay the first year of hazard up front, and the first year of flood, if they're in a flood zone, has to be paid up front. And then you have your right now it's 3 months of hazard and 4 months of property taxes.
Right.
Well, that goes up every month now. That goes up another month, right? 4 and 5 and 6. So as we get later down, especially when you get into October, now you have a whole year of taxes, right?
Right.
Plus your escrow. So it changes the year to month to month as we get deeper and deeper into the year, but we have to be aware of it.
Right.
And just explain it to them. And there are seller credits, right? The seller is going to give you a credit from January 1 through closing.
Right.
But there's still added costs.
And I have all the time. I have people that say they're going to buy a house for $500, and then sometimes it goes to $600. I have it go the other way where people are like $400 is their budget,
Correct.
And then slowly through the process it goes down to $300. And these a lot of times are cash deals. Now, if you're actually doing financing where you're buying with someone else's money for at least a portion of the transaction,
Yes.
That's why it's important to sit down with somebody like Patrick and figure all this stuff out first so that you have a clear picture. Actually, when you're going to buy a house, it's almost more important to talk to a guy like you first, to figure out what the real picture is so that you go into this knowing, okay, it's not 100, it's 118.
That's right.
Or whatever the numbers are. You want to know this kind of stuff.
Well,
like surprises
I'll kill you.
Are good at Christmas and your birthday. But.
That's right. And now the rest of the time they all suck. Yeah,
right.
That's right. We have we're seeing two kinds of borrowers right now, right? And at least specifically in the second home arena. You have the guys that are coming down and buying cash, they don't care.
Right.
And then you have another group that are preparing to leave the Northeast, the Midwest, and everything to get down here because of everything that's going on.
Right.
And those people have it's not so much dollar amount, but they have a payment in mind.
Right.
Those people, we try to work backwards, right? I don't want my all-in payment to be more than $1,500. What do I qualify for? Even though they qualify for a lot more than that, it becomes a number in their head.
Right.
Now, every time we've done that and we work backwards, the purchase price is always much higher because they never get what they want for that price point that keeps their payment where it is. It's always, I want it for $300, but now, you know what? Is it okay if I go to $379? Sure.
Right.
And it's a non-issue, but that's generally what we're kind of seeing. People are still coming down with a predisposed, like, I'm going to be able to get this great house for $250. And in most cases, you can get a decent house for $250, but you're not getting that house on the water with a pool and a big S&I.
Right.
Unless you got to get it. You're north of $350 now,
right.
And they're learning that once they get down here, lack of inventory and stuff, or they're being driven into much higher property values. And let's face it, I guess everybody right now is, if you're not getting lists for your house, you're probably listed way too high,
right?
Because right now we're seeing properties coming in, we're getting contracts over list.
Yeah, if you figure out, like, if you list at value, then you're going to get multiple offers.
And on the weekend.
Yeah. It's if you want to sell, now is a really good time. You got to kind of have your ducks in a row if you're going to sell and buy.
That's true.
Because you still have to go through the pain on the buy side.
That's right.
And it's not that easy, but yeah. Okay, so let's talk about interest rates. That's something that, and you guys were recording this Thanksgiving 2020. So if you see this video in 4 years on YouTube, and you think you can,
Thank you for putting it out there.
Yeah. Just so you know, that's the date of this recording. So you're not calling Patrick when rates are 6.75.
Oh, God
saying
forbid.
You said you can get them for 2 something.
Right now, rates are, there's no reason to get anything in the 3s, even at this point.
Really?
Yeah. FHA and VA, if your score is 680, I'm not talking great. I mean, that's middle of the road.
Right.
You're going to be at 2.25. With a lender credit in most cases.
That's like, we always talk about this. It's free.
It's free.
I mean, if you had to lend people money to like make a living,
you couldn't.
If you couldn't get 6.7, it's over.
It's over.
So I mean, 2 something is just like
right. Now we're seeing conventionals. On an owner-occupied, 2.5 with 20% down and a 700 score.
It's crazy.
15-year, 2.375, 2.25. Second homes, 2.875. I locked one yesterday on a second home with 10% down at 2.69.
Wow.
And that had a $400 lender credit towards closing costs.
Wow.
So
they're just giving money away.
it's the lowest that I have ever seen.
Would you go right now? Would you go 30 years fixed and pay extra on it, or 15?
No, I would go 30. I mean, that's a tough question, right? It depends how long you want to stay in the house.
All right.
If this is going to be your house where you know that this is going to be your dream home and you're going to stay there, I would go 15 and it's yours.
Right.
Right? And as long as it's affordable and it makes sense. On a 30, I mean, right now you could do a 30 at a rate, at that low of a rate. And if it's not your forever home, chances are 2 or 3 or 4 years from now, if you want to upgrade, that's, now your fixed rates, your fixed costs are so low, it might be perfect to turn it into an investment property.
Right.
And look at the rental. What's your cash flow going to be, 5 years from now on that house with fixed rate, that kind of low. I always like things a little contrarian than most.
Right. And what are some of the challenges that buyers are facing today, with time frames and all that? Are we still facing difficulties at the back end for time, or is it moving up?
It's getting better. When the refi boom, 2, 3, and 4 months ago, the refi boom just flooded the market with files and stuff, and the turn times were terrible. We were looking at 10 or 12-day turn times just in underwriting in some cases. It's gotten better because the refis are all kind of weeded out of the way. So we're getting turn times back on initial underwrite in 4 days.
Okay.
So that's working out okay. Quite frankly, the banks are not in a real hurry to underwrite files and get stuff done, especially when the rates are 2.25.
Right. Right.
They'll never admit to that, but that's just always seems to be the way. But you can certainly sign a 30-day contract, and if you have a motivated buyer, it's wonderful.
It's doable, like 30 days.
Yeah. And we put it out, and listen, so a motivated buyer, it's worth their weight in gold, and that's why.
30 days for mortgage approval.
30 days to close.
30 days from contract to close.
To close and
now, if you add in a 2-week inspection period, I mean, technically 45 days makes more sense just so that you have 30 days after the go date.
I don't like to order appraisals until we have the inspection back, right? Because once that money's gone, it's a pain to try to get it back.
But it could all be done simultaneously?
That's correct.
30 days from contract to passing over the keys?
Yep.
Okay.
That's right now is pretty much right.
And this is another reason to work with a broker, in my opinion. Because when you go to the bank, Susie at the bank, has a lot less empathy for your situation because she's just there getting paid.
They're getting paid.
And it's like she's getting paid whether this deal closes or not. And, hey, maybe I'll just wipe Friday's stuff off and do that Monday. Mm-hmm. Whereas Patrick is like very, attuned to dates and times. He's a go-getter. And he knows what he's talking about. Which, if I had him go on and on about rates and all that stuff, it's like talking.
We can do a whole secondary thing if you want to. I'll let you know how this really works on the nuts and bolts. But
maybe we'll do a live where we could have people with questions.
Oh, sure. You
can call in and ask the mortgage broker. Okay. Hey, for sellers, FHA and VA loans have some specific requirements. Mm-hmm. So if you're selling your house either with a realtor or by yourself and you're going to accept an FHA or a VA loan, what are the things that they have to keep in mind with those extra, like criteria and circumstances?
There's a couple of disclosures that FHA requires, right? The FHA addendum and a VA addendum that the sellers have to sign, so do the listing and buyer agents. From an FHA standpoint, that addendum is probably it. The appraisal is a little stricter.
Inspections, repairs?
Only on VA.
Okay.
The FHA, I haven't gotten an appraisal back yet that has forced, an FHA deal to go away or change or die or that kind of stuff. We haven't seen that, because right now, for most of the properties here are in pretty good shape. VA, is the toughest appraisal, and the way they look at it, and that's because the consumer is getting 100% loan to value, right? They're not putting any money down, so everything is on that asset. So on a VA appraisal, they'll have to get a wood destroying insect, that's usually paid for by the seller. There's a VA addendum, and then the condition of the property they really scrutinize that, making sure there's no, mold, wood rot, the roof, go through the roof, or go through the list of items, because that's all they really have is security on the deal.
Right.
FHA is a little bit light, is one step easier, and conventional is the best. Because conventional,
there's money down.
There's money down. The credit generally there's higher credit. There's more money down, and it's just a different category of paper.
Right. So the only reason I wanted to bring that up is because if you do, put your house up for sale and you get a contract and it is a VA or an FHA loan, if you have, an old house from the 50s in the yacht club, and someone writes a contract and it's going to be a VA loan, put your seatbelt on.
That's right.
If it's not in pristine condition.
Correct.
Because that whole thing could fall apart. I mean, the lender will still do it if you're willing to make the repairs. Absolutely. It just depends on if you want to redo the soffits, put in a new roof, or whatever else they require.
Now, keep in mind too, right? FHA has the 203K, which will allow somebody to buy a house and do repairs. Okay. So if they want you negotiated that they wanted to have a new roof, they could get up to $35,000. That would be obviously added into the purchase price.
Okay.
To do whatever repairs, to do the repairs that they needed to do.
And FHA will fund that before the closing?
They'll get, what happens is at closing, the licensed contractor, because it has to be licensed, would get half of the money to do the improvements at closing and the other half when it's completed.
Okay, so they actually can buy properties in less than pristine condition.
It's an option.
Okay.
It's a little bit more expensive. It's a little bit higher rate. That money's held in escrow. So there's... there are like a reinspection fee for the appraiser has to go back out there and confirm that the work is done. There's also a bring down on title because if there's a permit, they got to make sure that the permit has been removed before that last draw is cut to that contractor.
Okay. Yeah. See, this is all good stuff to know, and this is where the broker advantage comes in because. It's like if you go to just a store, they have what they have at the store. If you go to the mall, they have everything.
You just have to look around.
Right. And Patrick knows where to find this stuff and what's what. It's just good to have somebody you can call and get all your questions answered.
Yeah. I mean, even in the beginning, I just have one now that a gentleman just came in the office this morning and he owns a medical marijuana shop.
Oh, sweet.
In Maine. And it's going to be a second home purchase. And he's already been turned down by the banks because they can't.
Because he's a drug dealer.
Well, that's, yes. Lack of a better term, yeah. And that's how they consider it. I have, and he doesn't know which way to go at this point. So I'll in a couple of hours, I will know where and what, if we can do this, is conventional guidelines going to accept this, who is going to accept it and where I can place it, or does he have to go to a credit union or something along those lines?
Right. So if you're a drug dealer, Patrick still might be able to help you. Maybe not street level.
Legal. Yes, with tax returns and money in the bank. Yes, it's amazing what will happen when those two things can be verified.
Yeah. Let's talk about refis because rates are low, super low.
Yes.
And in some cases, it makes sense to refi as a result of that. And in some cases, it might not.
That's right.
And, because people see these super low rates, they're like, oh, mine's at 4. Now these rates are in the 2s. Mm-hmm. Should I refi? Complicated question, I know, but what are your thoughts on that?
It's math, guys. Everything comes down to the math, right? If your monthly savings is going to be able to be recouped in 3 years or less, then it might be worth it to look at it, but you really have to do the math. Okay. Because of the closing costs that are still going to be in, you're still going to have your same closing costs that you had when you bought it, and your same escrows are going to be set up the same way you did as a purchase. And even though you may get some of your escrow back from your existing mortgage company 30 days after it's paid, you still have to do the math.
Right.
Right. And if you're saving, $250, $300 a month, I'd look at it. If you are going to do this to reduce your term, you bought your house 3 years ago, you have 27 years left, and I can get into a 20 and relatively keep my payment the same, that's a no-brainer. If you can get into a 15 and have your payment go up a little, by $100, that's probably a no-brainer.
But if you have to pay a ton of money in closing costs and you're only going to save $100 a month, you'll never amortize it out.
Yeah, I mean, there's a lender right now, wholesale, that we deal with. It's called United Wholesale, and they were probably a couple of weeks ago went public, maybe a month and a half ago, saying they were going to do rates at 1.99, and that's what they do. They put it out at 1.99 on a conventional mortgage, and everybody was like, "This is great! Oh my god! Oh my god!" Well, you got to look at the next line. Well, they're charging you 3.5 points.
Right.
An origination or discount to get to that 1.99. Now think about that for a second. On a $300,000 loan, that's $10,000 in points.
Right.
Plus your standard closing costs.
Right.
So are you willing to pay $27,000 because you're going to get a nice sexy rate at 1.99 on a piece of paper?
Right.
It's ridiculous.
Right.
There's no benefit.
Right.
To do something like that. So don't look at just the rate. Look at the overall cost, and then look at your savings.
Right.
3 years or less, shorten the term, I'm with you. Because you're right. If you can do a rate and term refi right now, even at 4.25, where you are 4.25, and you can get into the twos, if you plan on staying in that house a long time, and you're okay at that $225 savings, and you're not going anyplace, look at it.
Right.
If you plan on selling this house in 3 or 5 years,
makes no sense.
No sense whatsoever, because you're going to pay all those fees. You'll never be in it long enough to recoup the savings. Just make the extra $100 a month in payment.
Right.
You'll ultimately drive down your interest rate that you currently have, and you'll pay it off sooner.
Right.
You just have to look at it and be disciplined enough to carry it through. Right.
Right. Okay. Yeah, I mean, and that's, if you're not a numbers person and you don't know how to quantify these things, because for a lot of people, it's like the math part of it just
escapes them.
Yeah, because there's just so many moving parts. There's so much stuff going on. It's like, what does all this mean? What's the bottom line?
That's right.
And that's where a guy like Patrick can help you figure all that stuff out.
Mm-hmm.
I mean, I just had a buyer that I was working with a couple of weeks ago, and she had some credit issues, and you actually talked on the phone, and Patrick called me back and said, this is what she needs to do. I basically gave her a plan to make this happen.
That's right.
Which is great, because as an agent, I don't have to deal with it. Not that I could anyway. And
you couldn't, right. She's not in a position today,
right,
to be able to pull a trigger and buy a house.
Right. But he came up with a 90-day plan where she could, and she had a different strategy, with some kind of debt pay down something. And
she was going through the debt, the people who've had credit score fixtures.
Right.
Right. Sometimes it's just easier to call the creditor and settle it, if that makes sense.
Right.
I know I owe $1,500 on this account. Hey, listen, don't tell them you're buying the house, but hey, listen, you know what? I want to settle this up. Are you okay if I pay you? Will you accept this as payment in full for $5?
Right.
You make sure you get the letter from the creditor.
Yeah, he put together this plan. It was where some people would say, you just can't get it done.
You can't.
He just had a plan.
Yeah.
So finance for a lot of people is like the Matrix, where you just see these dripping green numbers, and Patrick just sees the girl in the red dress.
That's it. So, and it's easy. And listen, and the thing is, everybody, it's ultimately up to their responsibility anyway, and no different than you or I paying our bills or not.
Right.
But if you tell them here, hey, first step is, okay, you found out where you're at. You're not ready yet. Here's
right.
X, Y, and Z.
Right.
After you finish Z, call.
Right.
And then we can relook at it. Now, listen, two things are going to happen, right? Either she's going to stick to that plan.
And do it. Or not.
And you get a buyer 4 months from now, or whatever it works out to be.
Right.
Or that's one less person who's going to be calling you to buy a house, because they are not going to ever be in a position where they're going to be able to buy a house.
Right.
Either way,
Right.
we become more efficient, and we can actually help the people that really want to become homeowners.
Right. And whether she does or not, God bless her. I was just glad that I could give her to somebody who actually could say, hey, okay, you have a problem, but here's how you do that.
That's right.
And that was like, it's super valuable. All right. So if people have questions or they want to reach out to you, what's the best way to get a hold of you?
Cell phone. And then listen, don't everybody get upset. It's a New Jersey number. I'm a New Jersey guy, if you can't tell. So listen, it's 201-681-1581. My email address is pderosa@infinitygic.com. If you have any questions, call, email me. If you even have a customer that you even think that the rate is too high. Nobody should have a rate in FHA in the 4s, guys. Shouldn't happen.
Right.
If you see that, call. If you see somebody being charged points, it really shouldn't be happening right now either with rates where they're at. There are very few instances where that should really fall into play.
Right.
And if you have a question about product or pricing, it doesn't, give me a ring or send me an email.
Yeah, Patrick will shoot you straight. And whether you are a buyer or a seller that has a contract that you have questions about, if you're thinking about refining, if it has to do with money, finance, mortgages, I rely on Patrick, and I recommend that if you have questions, give him a call. Like the New Jersey guys, like, are hustlers.
Yeah, I know we're brutally honest sometimes. I'm sorry.
I'm a Midwest guy. So but I want my finance guy to be from New Jersey.
I get it.
All right, Patrick, I really appreciate you taking the time.
Thank you so much for having me.
All
and
right.
Everybody have a happy Thanksgiving and have a nice holiday season. And, look for a better 2021.
Yeah, we can only hope, right?
That's right.
All right, thanks a lot.
Thanks,
Patrick.
guys.